don't get bear hold. That's all I'll say. Just whatever you do, do not get bear hold. At some point, everything's gonna start going back up again. Like don't worry. This is not about betting on global collapse. This is about figuring out when this particular show is gonna end.
This episode is brought to you by Kraken OTC. Get access to 24/7 trading services for high net worth individuals and institutional clients to execute orders over $50,000. You'll hear more about them later in the show.
We're live. We're doing
Welcome to the stream, everybody.
What is up, everybody? I guess we'll let a few people trickle in, but we're doing it. Jonah, you have the nicest background I think I've ever seen in a live recording that I've been in. So props to that.
Thank you. I live in a nice area. It's really, really beautiful here. I would say it's definitely a good place to forget about how much money I'm losing. And I would be recording next to the usual white wall, but that area is out of commission at the moment. So you're stuck with me outside with the crappy microphone.
Doing well. I love
Jonah,
it.
Jonah, you know the background I miss the most? That butterfly gun. You need to
that was a good one.
Felix. I don't know if you've ever seen this thing.
I don't think so, no.
Jonah, why don't you explain your butterfly gun?
So during the crazy flash crash bear market of 2018, or just before it, I decided to buy a piece of art. It's a North Korean AK-47 covered in dead butterflies, and the bullets are filled with different commodities. And I thought, this is a good commodity trader art piece. So I commissioned it from the artist, told him I'd pay for it in cash to get a discount. And then he started working on it. And then this was sort of at the peak of a very good year. And then the market basically, my P&L went down by 80% between when I said done on that to when I owed the money and got it delivered. But I didn't flake. I took delivery. And now I have the hardest thing that you could possibly import from London to Los Angeles, a North Korean fully automatic gun covered in dead animals filled with
that sounds like something that should be in the Denver airport. They have like those insane graffiti signs.
Oh yeah. You've heard all the conspiracy theories there.
Oh
I'm
yeah,
sure.
Yeah. It's like
That's for another
Illuminati
podcast.
on a world pace. Yeah. Okay. I think we have enough people in here that we can stop shit posting and actually get down to the brass tacks. Good to see you guys. It's been a couple of weeks. We all got together at the Digital Asset Summit, and it was a ton of fun. And yeah, it's just fun to collide the different worlds of my macro world and your guys' crypto trading world, and see where we intersect. And there's a lot of cross currents too. Jonah, you were trading oil when I was probably 5 years old, so there's a lot of different cross currents there. So yeah, man, I thought it'd be fun to just chop it up and see how we're thinking about things.
Yeah. I mean, so far so good. I'm glad that you pointed out Jonah is an old man. I like to say that to him as well. But by being an old man, he has some actually pretty amazing perspectives on how these types of markets trade.
Yeah.
As a guy that has not been through monumental shifts in global economic order before in my trading career, I have to say this has been one of the more difficult things that I've had to do is navigate this without blowing up. I think a lot of people you can kind of sleep on what happened. Prior to it actually happening, there were a lot of people, okay, yeah, maybe he'll put tariffs on. I think even heading into Liberation Day, if you had polled the vast majority of market participants, I don't think they would have said you're going 20% or 16% straight down in 3 days.
That was yeah. I'm curious about your guys. I'll share mine, but I'm curious about your guys' thought process going into that, because I was there watching the live stream that day, and going into it, I was 50-50 on what was going to happen, and was just ready to hit the green button or hit the red button depending on how things are going to transpire. And I know myself personally is, we got that initial Wall Street Journal it's just been a nightmare the past week for, just like these news media putting out these headlines and just, swinging multi-trillion-dollar assets in one direction or another. And this all started when initially during that tariff announcement, Wall Street Journal, I think, was the one that came out with the 10% flat tariffs, universal tariffs, which if you looked at expectations, that was pretty strong on the lower than expected side of things. And then, I saw that and hit the green button, and then pretty quickly the almighty chart of doom came out and just sent everything spiraling in the other direction, and had to quickly get out of those at break even, and then just, went the other direction and just got out of almost everything else I had. And, it's the beauty of being just singular traders, right? We're not, maybe you guys are trading multi-billion-dollar books, but I'm not. So, I could just pretty much get out instantly. And it feels like what has happened the last 3 days since, like market trading days since, is just been everybody else catching up because, the pod monkeys, the multi-strats and the CTAs, it takes a lot longer for those guys to unwind their books. And, the last, especially Friday, to me, seemed really interesting in terms of just all out degrossing. There's gold down, equities were down, and then we started to see rest of world equity down, which was a new thing that really didn't transpire. So yeah, it just felt like we saw the full on unwind of all those books. And yeah, like what were you guys thinking about going into it versus what happened?
Well, going into it, I wasn't, let's put it like this. I was not expecting the Trump administration to be calculating tariff rates by dividing, imports versus exports. Like I was not, that was not on my radar. And I have to say, that to me is what made it a very dangerous situation, because it takes away the logic of a lot of it, right? If you're actually seeing that play out right now. If prior to that you were thinking, okay, these guys are going to, Trump is going to get out there and he's going to put on a ton of tariffs on these countries in order to get them to reduce their tariffs, that's actually a lot easier to solve than the situation that we're in today. Like Vietnam comes back and they say, well, we'll go to zero tariffs. And Trump says, no, there are all these other things that you're doing. Vietnam's like, what? Can you explain it? And then there's no like real explanation for what the other things, it's like vague accusations of currency manipulation and we need to export more to you than you export to us. So it makes the actual calculus for getting out of this, I think, a lot more difficult in my personal opinion. And so I think that, the idea of, okay, well, this is a negotiation tactic to maybe these things are sticking around for a long time, I think is why the market reacted the way that it did. Because prior to Liberation Day, I think even like the top 25% of bears were probably thinking this is a negotiation tactic. And I think that that has shifted a ton now to, hey, maybe these things are sticking around for a while. That's what people are. That's what the bears are thinking.
Yeah.
That's what I'm trying to articulate.
This certainly wasn't in my playbook. I didn't expect this either. I was bullish coming into this whole thing, and happy to own that and tell people how I think about trading when you are wrong and get punched on the chin, because it's very important to not fall into a couple of obvious traps in a situation like this. If you're somebody like me, I'm not currently trading a multi-billion-dollar book. I'm trading my own book. So I don't have like a risk manager tapping me on the shoulder and telling me to get out of stuff, which helps. I think the interesting thing is I am pretty well connected in the pod shop world. And I've heard that a lot of pods have blown up over the course of the last month and a half, particularly in the last 3 days. So yeah, I think, Felix, you mentioned gold being down. That shows you that there are forced liquidations going on in portfolios. And so, Balyasny or Millennium or Citadel will fire the portfolio manager, delete their login information, and then somebody else at the fund is responsible for liquidating that particular book, right?
Yeah.
And it can get sloppy. So I think that's you're seeing a lot of that right now, which is why everything, including gold, is down.
This episode is brought to you by Kraken OTC, one of crypto's longest running exchanges with over a decade of experience. With Kraken OTC, high net worth individuals and institutional clients get white glove 24/7 trading services for orders over $50,000. You can trade over chat or even access Kraken's self-service automated trading feature to receive executable quotes in seconds. With access to Kraken's fully personalized service, you can guarantee a secure trading experience with deep liquidity and competitive execution. To get in touch, click the link in the show notes or head on over to kraken.com/blockworks. Availability of products may vary by jurisdiction. See legal disclosures for each jurisdiction at kraken.com/legal/disclosures. Crypto trading involves risk of loss and is offered to customers through Payward Interactive. Today's episode is brought to you by CryptoTax Calculator. Make tax season stress-free with over 3,000 integrations to support all of your wallets, exchanges, and on-chain activity. Simplify your crypto taxes by creating an account, importing your wallets and exchanges, then simply review and download your tax report. By using our exclusive discount code BW2025, you can enjoy 30% off all paid plans. This deal expires on the 15th of April. So make sure you hit the link in the show notes to get accurate crypto taxes with no guesswork. Thanks to CryptoTax Calculator for making today's episode possible.
Yeah, and so we can get into some of the frameworks of how we're thinking about this in terms of like the economic impact, but that reason is mostly why I've started to buy somewhat aggressively is Friday, and then also today in some respects we've seen a lot of those forced sellers, that forced deleveraging, which we haven't seen in the weeks lead up. Friday is when it started.
I think I saw a chart in the Daily Shot suggesting that last Friday on US exchanges, all of them combined, more shares of equity traded than ever before. It was the most active single day in US equity market history on a just like obviously dollar notional basis, but also shares basis, which really tells you something. So I think that, Avi and I talk about this a lot on our crypto pod. When you see big volumes and a reduction in open interest, that usually gives you a sign that the move is almost done.
Yeah, exactly. So that's why, you got to start thinking about just, I hosted the Ford Guidance Roundup with Quinn and the Macro Dirt Boys, Tony Greer and Jared Dillian, who are, awesome veteran traders. And it's just great to discuss these ideas of just how do you go about catching these knives where you see these forced sellers and you're like, okay, this is a rational selling. When I think about equities down 20%, we're getting into pretty decent pricing of a recession. So, you start to see on, trading around the margins here that you want to be getting in front of that. And to get in front of that is, the way we put it on that roundup is that you have to eat a few shit sandwiches before you really catch that bottom and start to see the other side of things. Because, I think about the last time that we went through one of these was March 2020. And I made the mistake of having a shopping list and getting excited, but always thinking there's going to be the next leg lower. And then that's where I'm just going to, buy everything all at once and then bottom ticket to perfection and then ride that, into eternity. And, I'll be happy to admit that I missed that Pico bottom because of that reason. Whereas, and I'm sure you guys can explain how you think about this, but you got to tranche it out and get in front of this thing a little bit at one point, even though you may think that it'll go lower. And that's the situation that I feel like we're in right now.
I already ate a couple of shit sandwiches on the way down here. And I'm done with that. So basically what I'm doing now is I'm afraid to catch this falling knife, but I don't think I might not Pico bottom ticket, but I do plan to buy more when the thing looks like it's starting to like grind higher, right? Mm-hmm. Like once I don't want to try and catch the falling knife. I want to try and buy a green shoot style rally. Avi always has a slightly different perspective on this than I do. But that's how I look at it.
Yeah. I'm more of a trader like you, Felix. I try to wave it in when things look like they're imploding. I mean, the best thing that any trader can do is buy for selling because it's very scary actually to buy selling and you don't understand why it's happening, because what that means is that somebody else knows a lot more than you and somebody else is probably selling for a reason that you haven't figured out yet, and then you just end up totally nuked. But that was actually kind of what tipped me off is when everything started going lower.
Exactly.
Right?
Yeah.
When you have gold lower, the bonds started going lower, and equities were going lower, and it was correlation of one. On the first day, on Liberation Day, if I remember correctly, that was not the case at all, actually.
No, it wasn't. That day,
like gold was up. I
Yeah.
think the market was reacting kind of the way that it was supposed to react,
Exactly.
which makes it, okay, I don't know, maybe there's just a massive repositioning. But once everything starts reacting 1-to-1, then you can say, okay, I'm going to start nibbling. Now, the issue is you never know how far that's going to go. And so what you try to do is basically just chip in when things look nuts, and then give yourself wiggle room, right? So that you're not completely out. The way that I like out of dry powder, the way that I like to do it is basically I basically just look at the charts and I go, this is kind of my line in the sand. Like, this is like a really, this is the most extreme that I think is a 5% chance of this actually happening. And at that point is when I want to be 100% long, and then I'm going to scale in until there. So for me, that was actually 460 on SPY. That was like that's like where I'm shoving absolutely everything in, and let me get up to like, because I say I think it's a 5% chance of that happening. Like, I'll deploy 80% of capital before that point, and then like, save, like, at that point I'm probably only buying like 15%, if that makes sense. Like, I try to that's what I try to do. So I'm never fully filled, unless something like literally insane happens. I think that's a bit of PTSD from March of 2020. Like when I just got like completely blown out. That was painful, and I think that's kind of stuck with me.
Janowitz has a great tweet about this today. He tweeted, he literally said, I don't know whether it's normal or not to, I'm paraphrasing here, I don't know whether it's normal or not to feel totally fine about this equity market sell-off. Maybe, I've been in crypto too long, but somehow these big jackknifes lower in price when the asset that you trade is as volatile as Bitcoin or one of these altcoins, somehow this doesn't feel that dire. And I certainly, I think Avi and I always talk about trying to maintain a strong balance sheet in either your personal book or your workbook and not be forced to sell. So I've heeded my own advice here, so I don't feel that scared. I'm definitely done trying to pick the bottom. I'm going to be buying when it grinds higher again, which, I may miss a V-shaped recovery, but I'll certainly catch a U-shaped recovery. In terms of how this recovers, I would love to get you guys' take, because this is, even though I'm an old man, I'm not as old as Jared Dilly, and he and I both worked at Lehman Brothers, but I'm still pretty old. I've never seen anything quite like this before, because this is a man-made calamity. Everything was just great before Trump decided to roil things. On the one hand, part of me thinks this should be a lot less scary than an exogenous, out of left field thing like a global respiratory virus pandemic, or the global financial crisis, which sort of just spiraled out of control and started it was out of control. This very much feels in the control of one guy, and he could unwind it with a tweet. And I don't know whether that makes this a way easier buy than those previous two crises I mentioned, or a way harder buy, because maybe Trump is just so insane that he's just going to keep pushing the envelope. What do you guys think?
Yeah,
I've
Jonah,
never seen this before.
The issue, this is what I'm debating a lot with too. And I mentioned, I tweeted something along those lines earlier today as well, mentioning that it's just crazy that this is self-inflicted. The issue is, if this keeps on for long enough, it scars the economy, regardless of if we revert back. So there's a few ways you could look at this. So, we've seen the Atlanta Fed GDP now that has been coming out, and it's just completely off the rails and completely skewed by some very, very, outlier events that are impacting imports data in terms of trade. So, regardless of, say, for example, Trump tweeted out, okay, just kidding, let's turn all these tariffs off, we're all good. The fact is that there's already a ton of imports that have landed on the economy. There's already a ton of delays in terms of hiring plans and CapEx investment plans from companies. There's already all these dynamics happening. And you make this point that everything was fine and dandy going into this. I actually disagree somewhat. In mid-December, I started to talk about a growth slowdown in the economy. And I think, I was pretty strong on the camp that it wouldn't be a recession by any means. I'm still not fully sold on the idea, although it's very close right now. But even if we took out the tariff stuff and the Trump fiscal retrenchment, there's already beginning to be some signs of the labor market slowing, and some of these more in the weeds data points that told me that the economy was more fragile than I think a lot of people expected and thought. So I think that there was that nasty combination of like a nasty recipe that was created of those dynamics paired with highly overvalued US equities. If you looked at just, broad surveys of institutional books, they were all in on US. The idea was you never need to own rest of world equity again. So there's like these technical factors paired with that I think set up the ideal catalyst. So, now I think about it, okay, what would happen if, we get to Wednesday and we learn that a lot of these tariffs, at least, if we say that the 10% is, flat and there for good, which I think it is, but the reciprocal tariff stuff, we're starting to see some discussions of, do some countries decide to retaliate like China's doing, like Europe is starting to talk about doing, or is it the other side of the boat of, the Vietnams, or we'll get into this, I'm sure, but there's talk of Scott Bessent going to lead the negotiations with Japan as opposed to Lutnick, which is very interesting. That was a pretty key signal for me. But, what if we get to Wednesday and this all reverts somewhat? Does that have, does that undo the effect on the economy? I don't think so entirely. But I do think it would be enough to see a very solid bounce and rally. But would it completely revert? I don't think so. That's how I'm thinking about it.
This episode is brought to you by Kraken OTC, one of crypto's longest-running exchanges with over a decade of experience. With Kraken OTC, high net worth individuals and institutional clients get white glove 24/7 trading services for orders over $50,000. You can trade over chat or even access Kraken's self-service automated trading feature to receive executable quotes in seconds. With access to Kraken's fully personalized service, you can guarantee a secure trading experience with deep liquidity and competitive execution. To get in touch, click the link in the show notes or head on over to kraken.com/blockworks. Availability of products may vary by jurisdiction. See legal disclosures for each jurisdiction at kraken.com/legal/disclosures. Crypto trading involves risk of loss and is offered to customers through Payward Interactive. Today's episode is brought to you by CryptoTax Calculator. Make tax season stress-free with over 3,000 integrations to support all of your wallets, exchanges, and on-chain activity. Simplify your crypto taxes by creating an account, importing your wallets and exchanges, then simply review and download your tax report. By using our exclusive discount code BW2025, you can enjoy 30% off all paid plans. This deal expires on the 15th of April. So make sure you hit the link in the show notes to get accurate crypto taxes with no guesswork. Thanks to CryptoTax Calculator for making today's episode possible.
It's kind of hard to thread that needle. I'll say that the move today reminded me a lot of the fake ETF headline that Bitcoin had a while ago. Do you remember that? Where you kind of just cleared out a ton of positioning. And then everyone started going, wait a second. If that's how Bitcoin is going to react to the ETF, I better get in. Mm-hmm. And I think that could contribute here to a similar mentality, which is, if Nasdaq's up 7% in 10 minutes because of a fake announcement, I mean, imagine what's going to happen on a real announcement. And so I think that's probably enough for a bear market rally, which is kind of what I'm betting on. The issue is that I do think that these tariffs are a lot stickier than people are giving them credit for, in the long term. And so if I start with that view and I go, okay, Trump's been talking about tariffs for 40 years. He's finally got them in place. He really does genuinely wants to increase manufacturing output of America. That doesn't happen in a situation where the tariffs immediately go away. I think the rest of the world tariffs might be a negotiating tactic, but the tariffs with China, I'm not so sure about. Yeah. And so I think those end up sticking, which is what I'm nervous about. But there's a lot of potential good news for the rest of the world that could come out in the next, call it, week or so which I think would send up the market a lot, and you would see an extremely aggressive bear market rally.
Yeah, Avi, I'm glad you brought up the China thing because I think that's really, really important. The way I spent the hour before this live stream digging into a few different press releases and stuff that happened today. We had the Council of Economic Advisors Chair Stephen Moran had a speech, and there were some interesting tidbits in there that paired with a friend of mine, Danny Dayan, who's been on the show a bunch of times. He has a Substack. He put out this free note where he was gaming out what's the big goal here? What are we actually trying to do behind all the chaos and the volatility? And he really thinks that this is about aligning Western countries to go after China at full force. And you start to see that Cointelegraph analog headline this morning, it was so specific, it was so confusing for that to come out and not be real that, you got to wonder if there's some sort of trial balloon. Because if it were to occur, I think it does make sense for, okay, we're keeping the 10% on everybody, and then the reciprocal stuff, let's get to the table and negotiate, get those deals done. But China, we're actually doubling down on you. And I think there's a lot of focus on completely reshaping the economy. And, you can set aside your personal opinions of the execution of all of this. And I do think it's been quite poor, but I think there is some valid pursuits that need to occur in this reordering of the global economic order. You look at, I'm Canadian. I'm the victim of this idea of trying to become the 51st state, and this pursuit of Greenland and the Panama Canal. And I'm a total geopolitical LARP, but you just think about what are they trying to do in terms of just solidifying the Western base to go against China in terms of these capital and trade wars. And so I do think there's something there that we need to keep in mind. And to that point, I don't think this is something that just reverses randomly, especially for China.
I mean, I think the blue sky scenario for Trump is that you have extreme tariffs against China and negligible tariffs against everybody else. And based on the way things are already going, early reports of Ursula von Leyen coming to the table to negotiate a 0% for 0% free trade agreement with the United States, Japan, Israel already lowered their tariffs to 0. It doesn't seem out of the question to, it's optimistic for sure, but it's not out of the question to say, hey, in 3 months, there could be basically a new WTO that doesn't include China. Like the United States could have agreements with most major trading hubs, Southeast Asia, including Japan, the EU and LATAM and Canada, just, this new sort of trade paradigm where there's no tariffs. And then China could be 150% tariffs as that trading, that sort of trade war escalates. Yeah. I think that's what Trump's endgame is. And I think that I think a lot of people out there, pretty much it's a universal consensus amongst the financial market participants, both on Twitter and who I speak to in my circles, that Trump has made a terrible decision. I don't, my bubble doesn't really include like the opinions of too many blue collar, laborers in middle America, just because I happen to live on one of the coasts and I worked in London in my background. I would love to get the take of like somebody who's doing, theoretically the Main Street type people that Besant is referring to, saying this is helping. I'm not sure it helps them. I'm sure they're in favor of it, but like that's not who we speak to. In the forward guidance or the 1000X Telegram rooms, more like young kind of risk-taking types. So it's not clear to me whether this is a popular decision or not, but I think Trump is taking too much flack from the people that I speak to. I think that if this is the beginning and the end of his strategy, he just hikes a bunch of tariffs, drops the mic and goes golfing for the rest of his term. Yeah, that's obviously terrible policy. It's a huge policy error and the economy is going to get destroyed. But I think instead of that, my sense is that this is more like a, Queens, New York style real estate negotiation where somebody comes up to Trump and says, how much for your building? It's not for sale. $1 trillion, right? Like some crazy, stupid opening gambit. And, as I close out this thought here, just one final boomer reference. I don't know how many of you youngsters have seen the movie Zoolander, but in it, Hansel says, and I quote, "Don't you know I'm loco, man?" And I think that quote is kind of what Trump's trying to do here. I think he's just gone so over the top to make everybody think, wow, this guy means business. He doesn't care. He's golfing today.
Mhm.
In the midst of all this
Yeah.
chaos. Like it does, if you were gonna like, if you're a foreign leader who's just been tariffed and you're trying to decide between, hey, do I retaliate? Do I just wait this out? Do I try to come to the negotiating table? I think that Trump's crazy enough that maybe it incentivizes coming to the negotiating table.
Yeah.
That's
So yeah, in that Stephen Moran piece I mentioned, there was, they released the remarks, and I'll just read out a couple of points to tie in this whole, game theory of getting the Western world together, getting the rest of the world to pay their fair share for this US security guarantees. So he says, in my view, to continue providing these twin global public goods, there needs to be improved burden sharing at the global level. If other nations want to benefit from the US geopolitical and financial umbrella, then they need to pull their weight and pay their fair share. The cost cannot be solely borne by everyday Americans who have already given so much. And so he also pairs in and says, what forms can that burden sharing take? He gave these 5 options. So first, other countries can accept the tariffs on their exports without retaliation, providing revenue to the US. Second, they can stop unfair and harmful trading practices by opening their markets and buying more from America. Third, they can boost defense spending and procurement from the US, buying more US made goods and taking strain off our service members and creating jobs here. Fourth, they can invest in and install factories in America. And fifth, which is the most interesting one for me, is he said they can simply write checks to Treasury that help us finance global public goods. So you hear all of that, and then you see what's going on in terms of these geopolitical games that we're just speculating on at this point. But a lot of
write checks to the Treasury.
Yeah.
that's hilarious.
But think about what he's saying there is we've heard this talk, and a lot of it came from him, is like, issuing these century bonds where other countries need to buy these 100-year bonds, that are zero coupon bonds. They get no coupon. If inflation goes up, they're going to get wrecked on the price of those bonds. There's just the cost of doing business for those security guarantees. That's their perspective. That's not my own. I'm just saying that might be how they're thinking about it.
Yeah, I mean, it kind of makes sense from that perspective. I mean, I'm just thinking out loud here. If your goal as Trump is to isolate China and attack China, what they're going to do. They're going to be offloading a ton of your debt, and you need to figure out how to get people to buy it. And basically what you're saying and what he's saying is that I'm gonna use, if you go in there and you buy up a bunch of our debt, that's a way to get out of this for you. So he puts everybody in a tough position. He only wants one person to actually be there, but the selling of the treasuries that China's doing, because he put everyone else in a tough position, will be absorbed. So I think maybe there's a little bit of that
something like that.
There's a little bit of that game going on.
Yeah, there is this whole idea. Today Treasury bonds sold off pretty aggressively for where the market was at, and there's some people speculating that it was China selling. I think it was more so just market dynamics. Friday the market panic priced an outright recession, and I think it's just some big players taking some profits, rotating target date funds, rebalancing from bonds that have been doing well into equities, that sort of thing. But I think underneath there is also some validity to the idea that if we're getting into a capital war, the most powerful tool they have is to market sell bonds. So it's a distinct possibility. I don't think it explains the entirety of the price action today, but it's definitely something to think about.
No, it's something to think about, and I mean, if you go with the angle that he's really thinking about this, deeply. The only thing that makes sense that we've been able to come up with collectively is that he's targeting China, and he's targeting that area of the world, and so the idea here would be a controlled demolition. Like what you don't want to do is have them accumulate all of this leverage and basically sit on it until the moment where they could use it the most, right? Like imagine a hot war breaks out, and then suddenly like the financing costs on America's debt go through the roof because of what China does.
Exactly.
I mean, you really don't want that. So might as well force them out now, when it's not. The
Totally.
moment of maximum pain to sell it.
And think back to COVID, when we saw that supply chains were so dependent on China. That is something that we didn't really solve since then.
A lot of this, I mean, there's no shortage of takes on why this is the stupidest economic move in history. The Economist published an entire magazine to that effect. It does, just looking for positives here, it does seem on a number of fronts like, to give Trump the benefit of the doubt, even if he doesn't deserve it, does seem like there were a lot of band-aids that needed to be ripped off that he inherited, debt-fueled sort of deficit spending, major supply chain deficiencies that, to Avi's point, you wouldn't want to work out in the middle of a hot war. All this, debt ownership in the wrong hands, needing to get shifted to the right hands. It's if you're looking to just continue with the status quo, which the economists forecasted would send America into bankruptcy by 2037 or something, all else being held equal, he could have definitely cruised through his term without making any changes. He did get elected on not revolutionary, but kind of big talk about big change. And so to some extent, I feel a little bit stupid for not sniffing this out, right? I came into this term feeling very bullish, seeing the bullish reaction to his election as, a signal that what he was going to do in his second term was going to be constructive markets, just like it was during his first term. I didn't quite grasp the monumental nature of what he was saying. Like to Avi's point, he's been talking about tariffs for 40 years. I didn't really grasp just how serious he was about it and how unabashed he was going to be in his execution. So I don't necessarily blame him. He hasn't just this shouldn't be a surprise. And I'm annoyed at myself that I kind of got caught wrong-handed on it. But now that we're here and markets are 20% lower, I maintain the view that that we talked about when we were sitting on the floor at DAS in New York, Fijo. I do think that he doesn't have enough mandate to tank the stock market that much further from here before, basically the midterms, you get a blue wave and, maybe a super majority in Congress could start bypassing his veto if this really becomes unpopular and too destructive. So I just, I think we're supposed to expect a U-turn.
Jonah, I felt stupid as well, because if you really think about it, he fooled us in the same way that he's fooled so many people. He says so many outrageous things and then acts on a few of them, and but then you don't take any of it seriously, and so he kind of just comes in and we're like, yeah, he's a pro-business president, stock market's going to go up, all this other stuff that he's talking about. Yeah, he's talking a big game. Who knows if they're actually going to do it? But then he actually does it. And that was painful. What I will say to bring this full circle back to Bitcoin, this is actually pretty damn good for crypto.
It is.
Not even in the everyone says midterm to long term. I actually think this might be very good for crypto in the short term.
Yeah.
In the next 2 months.
Go on, Avi. Go on. Tell me more, please.
I'm finally. Jonah likes to say he's so bullish he can't see straight. I can still see a little bit, but I'm pretty damn bullish.
Earlier in today's episode, I mentioned Ledger's latest products, the Stacks and Flex, and I wanted to take a few seconds to tell you more about them. These wallets feature the world's first secure touchscreens, which don't just simplify your digital transactions, but also keep them extremely safe. These wallets are virtually impenetrable to online attacks because they store your private key in a secure offline chip. You can manage more than 5,500 tokens and install up to 100 apps. Choose the most trusted name in hardware wallets and take control of your digital security today at ledger.com, or hit the link in the description of today's episode to check out their latest wallets. This episode is brought to you by Wallet Connect, the connectivity network shaping the future of on-chain UX. From DeFi to NFTs, swaps to staking, Wallet Connect is the backbone of connectivity in the on-chain economy, seamlessly bridging wallets, apps, and blockchains. With over 220 million connections and 35 million users worldwide, Wallet Connect is the place to power your Web3 experience. With the launch of the Wallet Connect token, the network is taking the next step, paving the way for a fully decentralized, permissionless, and community-owned future of connectivity. To learn more, follow Wallet Connect on X and Telegram or visit walletconnect.network to stay ahead of what's next.
Yeah, I'm with you. I've been buying some Bitcoin as well. I do want to. So yeah, let's talk about that. And I also want to pair it with, as traders, how we're viewing what's priced in terms of these downsides. So, okay, we've come in with basically, obviously there's the tail risk of further retaliation cascading, but for the most part, it feels like a lot of what's out in the market now is marginally the worst possible outcomes. We're talking we have 100% tariffs on China on the tape right now, right? So it's like, do we go to 200%? I don't know. So you think about that, and then we're on the other side now. We've crossed the Rubicon, and now we're talking about negotiations. We got Scott Bessent. So again, this was very notable for me because Scott Bessent has not been involved in trade talks. He's going to Japan to lead the trade talk negotiations with the U.S. trade representatives. It's not Ludnick. They had the Rottweiler out there for bringing the stick out and whacking them, but now they're bringing in the carrot potentially. Scott Bessent's a lot more measured in his approach. So we're getting to the next phase now where the only real headlines are going to be negotiation ones. And are we priced for any sort of negotiation ones? And then looking at how that gets paired in, Bitcoin's been very resilient. And
wait,
equities,
quick question, Felix, on what you just said. Very quick question. Do you interpret, you tweeted that Bessent is going to negotiate with Japan instead of Lutnick. I interpreted your tweet to mean that Lutnick is getting sidelined in the Trump administration. Did you instead mean, hey, they've got the good cop Bessent and the bad cop Lutnick, and they're sending in the good cop, which means that they want to get a deal done? Like, what did you mean exactly?
I'm 50-50. I think it's either, we don't fully know. It's either, oh shit, we got a 20% equity correction and bond yields are still surging. This is not a good trade-off for us. Let's sideline Lutnick and get Bessent in there. Or it's what you say, a good cop, bad cop situation. It doesn't really matter what the outcome is. The fact is that we're going to go marginally from this insane rhetoric to somebody who's a lot more measured. So I don't know. I'm 50-50, but I feel like the outcome is still the same on the margin of what's priced. What do you think?
Where I'm expecting a bunch of trade deals and the market to go back up. And
Same.
I've been so wrong. I didn't expect that. I thought this would be one of those little 5% sort of pullbacks that you can buy with both hands, like we've seen so many of since the global financial crisis. I did not expect this. So take what I say with a grain of salt. I'm not selling a dime worth of risk assets. I'm not selling crypto. I'm not selling equities. I think from here, I tend to believe, Avi, that crypto will outperform equities. The BTC SPX ratio has been more resilient than I would have expected.
Which is very, very, very rare when it goes to the downside. I mean, that
shouldn't be like that.
Outperformance is very rare.
Mm-hmm.
Is that what's making you bullish in the short term, Avi? I haven't heard you short term bullish crypto in a while.
Yeah, just because I've been short term bearish for a while.
Okay.
But and that's just because I haven't. My framework on crypto, which I've repeated so many times that anyone that's listened to the podcast is going to get sick of hearing this, but it's value and momentum. In order for crypto to go up, you either need it to be going up already, and people buy into the momentum, or you need people to view it as a quote unquote value price. And there are two things that can turn Bitcoin into a value buy. The first is price, just simply price itself. Maybe you go back down to $50,000 and you haven't seen $50,000 in such a long time that you think it's your only chance to ever go buy it. The level gets defended and then suddenly you're going back up. Or some good news comes out that is actually beneficial for Bitcoin and beneficial for crypto. And I think that that's a little bit of what's happening right now. Regardless of what you think of when are the tariffs good or the tariffs bad, regardless of any politics, regardless if you think they're going to stay or they're going to go, the reality is that we have kickstarted a slow roll into a deglobalized world. And I think that is going to continue. The tides of nationalism are rising, both politically, geopolitically, from on a local level, on a national level. People are becoming more concerned within themselves than they are. Nobody wants to be part of the global community anymore as much as they used to be. And you're seeing this everywhere. But there's still a tremendous amount of demand to be interconnected globally. So if you shut down a ton of different pathways between countries and a ton of different valves of commerce between countries, but crypto still exists, then crypto inherently, I think, gains a piece of that pie, because there's still demand to hold cross-border assets to be part of a global economy. But if that's getting shut down and weaker over the next 6 to 12 months, then I think that and because there are sources of demand that are getting shut down, then Bitcoin goes up and I think it's also outside of that just a fear trade. I think Bitcoin went down and gold went down because of what we were talking about, liquidations across the board. But they're both now geopolitically significant assets.
Let me give you a concrete example. Let me give you a concrete example of what you just said, Avi. So Bitcoin is a commodity. I think we can all agree. It's also a currency, but it has a lot of commodity-like characteristics. When you enter a multipolar world, commodities become valuable because they can be bartered by independent third-party nations between two trade warring or hot warring nations. So for example, take a commodity that I know well, crude oil, and take the country India, right? America and Russia don't do direct trade with each other anymore. India can buy tons of Russian crude oil and tons of American products, and they can, they're kind of like this transshipment hub in the global matrix of capital flows because they're able to buy Russian oil, right? And as capital controls are a byproduct of tariffs and trade wars and deglobalization, to use Avi's word, as the world deglobalizes, you need more transshipment hubs, just like what India's pulled out of their hat to sort of intermediate between Russia and America in the middle of that scenario. So I think Bitcoin will end up being one of kind of an alternative reserve commodity / currency that can intermediate between different geopolitical hemispheres. It makes a lot of sense.
That's so interesting because I am bullish. I agree with all that, but I'm bullish on Bitcoin for some other reasons as well. So actually during the Digital Asset Summit, we did a live roundup, and I asked Quinn and Mike what was their one trade if they wanted to put forth, and I put forth one as well. And the trade I put forth was short Qs, long Bitcoin, vol matched or delta matched or whatever you want to call it. And the reason was because NASDAQ, and so the US economy was pulling back on fiscal retrenchment. The economy was slowing. And on the other side of the equation was every other country was beginning to fiscally stimulate because of a reaction function to Trump tariffs negotiations. So at the time we saw Germany talking about a $500 billion defense spending. And then now if we fast forward to today, we have headlines hitting the tape about China front loading stimulus to offset the tariff war. So, okay, Bitcoin is a global reflection of global liquidity and some other things as well, but that's one way to think about it. Qs are specific more to the US. So my idea was to short the Qs because it's, every signal is going in the wrong direction. The Fed was complacent and not doing anything, and they didn't want to get proactive, like they were in September and start to ease. The fiscal situation was deteriorating, and the economy was slowing. So I was bearish on the NASDAQ, but I thought Bitcoin would outperform, relatively speaking. And that's largely what happened. And I think, I had that trade on. I sold it a little too early. It would have been a really great one to sell on Friday when Bitcoin was doing super well and NASDAQ was down 20%, but sold a little early. But the thesis remains. So I think that thesis will continue further. Bitcoin is a global liquidity asset, and every other country is going to have to stimulate now to offset the negative growth shocks that come from, one of the smartest economists that I've seen, Brad Setzer, who he focuses on global trade. The way he framed this whole shock is, imagine global oil rose $70 overnight. Like, you understand what that means, Jonah? It's like the cascading effects are huge, and it does lead to lower growth that needs to be offset. So I think for that reason, Bitcoin has a lot of upside, and I think that's been some of the resiliency. Now, when I think about when I put my trader hat on Friday, I was buying equities hand over fist, and less so Bitcoin, because I was worried. That was when everybody was talking about the decoupling thing, and Bitcoin was doing its own thing, and then pretty quickly it reverted to 76,000 this morning. So now that that's complete, I'm a lot more excited about Bitcoin.
Good job waiting that out. You were right about to wait that out.
I won't celebrate too much. I will say I bought a bit on Friday, so I did eat a bit of a shit sandwich. But yeah, I did mostly wait till today.
No, I think that's a really phenomenal thesis, and I think that's accurate, and I do think that'll continue to happen. And China's going to do, they're going to do it in a big way, because they're going to have to. The other thing is, given all of that, Bitcoin, just from a trading perspective, is in a great position from a risk reward. Just if you're constructing it out, basically, who are the sellers of Bitcoin? The sellers of Bitcoin are the people that have made a ton of money on it, and want to get out, or they're the short-term traders that want to get out, because they think momentum's going down, and they're coming in and they're shorting the market. If I go and I look at the order books are just ridiculously stacked from 65K to 73K. So I'm just talking about flows now. And when one thing that's really interesting, I think one of the reasons that Bitcoin did outperformed is because you had so much momentum and craziness in the equity markets. A lot of those people that were shorting NASDAQ, that 3 months ago, that would have shorted NASDAQ, or shorted Bitcoin to catch a down move in NASDAQ, we're just shorting NASDAQ. That's what I'm trying to say. It's like a lot of the momentum traders were just focused on equities. We're like, I don't need to go sell more BTC. There's no reason for me to go do that, because I can just sell equities and they're down 5%. This is great. And I do think there's actually a lot of that. Just a lot of the pod shops will use Bitcoin, which is why Bitcoin started selling off on Sunday, in my personal opinion, because and over the weekend, because people wanted to bet, like all these momentum guys, they wanted to bet on equities opening lower. And how are you going to express that bet on a Sunday? You're going to sell Bitcoin. That's why Sunday morning it starts collapsing.
Bitcoin as weekend spoos. But if Felix is right, totally, and Bitcoin starts to basically decouple from Qs and outperform to the upside, oh my God! So yes, Bitcoin. I don't know if I'm
going to hang my hat on decoupling, but I think front running of liquidity.
Well, yeah, front running for sure. So basically, the whole point of this rant was that I think that the sellers have sort of exhausted themselves for this particular market right now, and there are clearly a lot of buyers waiting. The dip on Monday just got eaten up so fast. Mm-hmm. So I'm of the opinion that Bitcoin has all of the positive things that we just talked about, and then also from a flows basis looks really good.
Yeah, using your value and momentum framework.
Talk some shit, dude. I literally Friday as a crypto trader that expresses edge. Like I just somehow I'm just much better at trading crypto than I am at trading equities. Obviously, I think it's an easier market. Like I was buying alts hand over fist on Friday against ETH and BTC. So I was actually shorting the hell out of ETH and buying a ton of alts when they had that like massive collapse in on themselves, and that's done extremely well today. And I think that what you have to look for in these types of situations, alts are kind of like alts to Bitcoin are what Bitcoin are to equities. Like they'll often actually bottom before Bitcoin does, because everyone sells that first. Like everyone gets out of that first. And so if you're expressing if you're expressing a view, it is a lot of comments are saying Fartcoin coded. It is Fartcoin coded. If you're expressing a view that you think you're close to the bottom, actually, it's actually historically an extremely good trade to try to buy alts and short Bitcoin and ETH against them, because they tend to bounce way harder on the way up, and everyone's always worried about the downside. But if you're close to a bottom, you actually have like limited downside in alts, in my personal opinion. Or if you like view that you're like within a day or two, because they've run out of sellers relative to BTC and ETH, and that's actually what happened. So I try to take those trades.
Yeah. Fartcoin is an incredible asset to trade. Like, it just, all the attention is consolidated that, you know, when you want high beta in crypto and you don't want to go on perps, it's just like you just go buy Fartcoin, and it is incredible,
dude, it's
for that.
Crazy. I don't understand it. I mean, to be completely honest, like I did not buy any Fartcoin, and it was just nuts. I'm looking at it, it's up 23%. This thing's crazy.
The Fartcoin is the greenest thing on my board today. Also, I think it's so, just because of what it is, it will never be an institutional asset. Imagine buying Fartcoin at Millennium, losing money on it, and then your division manager, your boss, comes up to you and says, "You lost money on what?" Right? Like, that prevents that skewed. You know, if you make money on it, who cares? But if you lose money on it, you're just out the door. You're sent packing. So I don't think anyone at any company, even a crypto trading company, will buy it. It's really just purely a metric of retail sentiment. So if that thing is bouncing 25% today, it's up more than any other major altcoin. Maybe the degens online have finally drawn a line in the sand and decided to buy stuff. I take your point though, Felix. You bring up a very solid observation that crypto in general, Bitcoin in particular, is really just a reflection of global liquidity, maybe lagged 3 months. So like M1 money supply is 3 months ahead of Bitcoin prices, and M1 money supply bottomed out and started rallying pretty meaningfully about 3 months ago. So, hey, maybe, if rates get cut from here, plus that, maybe we are in a more constructive general environment for Bitcoin. And to Avi's point, maybe the altcoin apocalypse is finally over. We've been talking a lot about how inverse alt season is the new alt season, just be short everything. Looking at the prices of some of these coins, even though most of them are completely useless, I wouldn't want to be short anymore. It's you playing with fire at these levels.
Yeah.
I mean, these things are just for like flipping around. Sorry, what were you saying, Felix?
Yeah, I was just going to say that the framework I have is that we can get a Bitcoin all-time high just on this marginal improvement of global liquidity, but without the US. But I think for meaningful breakouts in Bitcoin and for alts to really start to perform, we do need the US to start to play ball. And the picture from the Fed side of things and the liquidity side of things is a bit hairier. I interviewed Michael Howell, who's like the liquidity guy, a week ago. And, he has some really interesting statistical analysis of Bitcoin correlation to global liquidity. And yeah, he thinks, there's an interim upside tailwind for it, but things get really hairy in the spring/fall. And I agree with that. Now, what we have to piece apart now is that, okay, well, if we have markets totally falling apart, the reason they're not meaningfully moving is because they're scared of inflation. But if you look at forward-facing inflation metrics, inflation, the one good part about a hit of 20% to equities is that, in my opinion, is the last shoe that needed to be dropped for inflation to come back down to target. That paired with oil, breaking down meaningfully, it really broke a really key level. I think it's like $60 now, and could trend lower. I don't know if you have thoughts on that, Jonah. But overall, like, you pair those dynamics, inflation is done. Mm-hmm. There's going to be the price level increase from tariffs up front. But if you look at the inflation swaps market, like the 1-year inflation swaps are a bit higher, but every other swap tenor past that, they're all cratering. So yeah, inflation is pretty much done. So you could see them start to ease a bit more, but I think they need to wait for that to come out into the hard data, or markets fall apart even further, and then they have to intervene quickly. Yeah.
There's really only one threat, like, just since you brought up oil, there's really only one threat on the table for higher oil prices, and it's still just some kind of flare up in the Persian Gulf, some sort of kinetic warfare, maybe American-Israeli operation to take out Iranian nuclear sites and subsequent retaliation. But like absent that, oil's going down another 10, $20. The front spread is still in backwardation, meaning that the front future, the price is higher than the price of the second future. That's called backwardation. That's a sign that the market's still a bit constrained, which is bizarre because, you know, the price of oil is sold off so much. You would normally expect prices to fall in a surplus market, which is associated with contango, meaning price now cheaper than price later. It's weird that you're getting a sell-off in backwardation. I think that tells you that the OPEC plus countries of the world are still trying to prop the thing up, which means that they eventually can get stopped out of their trade, as they often have, let a bunch of excess supply into the market, and then prices really tank. So, like, from just a fundamental supply and demand perspective, the story of oil is the story of many commodities. The Bloomberg Commodities Index had its biggest 3-day drop in a while over the last 3 days. I think inflation is not, unless you get
inflation's done.
Unless you get a hot war, like it's really hard to imagine inflation coming back here.
100%.
So when's the Fed going to cut? When are they going to cut our rates to zero and pump our bags? What's going on here?
Well, that's the thing. Like, and this is the whipsaw in the bond market and like the STIR market, like short-term interest rate market. Is Friday they priced, you know, I think we were at 4.5 cuts pretty quickly. We didn't quite get there for a May cut. I think that's still, you know, it's still a ways away, honestly. I think we may see some language that gets us pretty close to a May cut, or at least some language in that May meeting that'll lead to some meaningful cuts. But, you know, like, let's just look here at where the 2-year yield is. Actually, interesting, it reverted a lot, but it's still at 3.78. And Fed funds is at 4.33. So, you know, there's quite a bit of cuts being priced in versus the rhetoric that came. Like, Powell had a speech on Friday, and he sounded like he was not interested at all in cutting, but the market's fading that. You know, I think we're back to like around 3.5 cuts priced, which seems fair for not going into a recession. And that's sort of the battle going on in bond markets right now. Exactly. Well, that's
pricing 80% or something, 75% this year. Well, can you help me understand what J Powell is thinking? Why wouldn't he cut? Right.
I think so. I think he's ecstatic about a 20% hit to equities because, you know, Citrini, if you guys read him, he has some really incredible analysis, and he's been doing a lot of work on this idea of the economy being propped up by the top 1%, really the asset owners of the world in this K-shaped world. And the bottom 20%, or sorry, the bottom like 80% or whatever, have been in a soft recession for a few years now. The consumption is not coming from them. It's coming from asset owners who keep getting richer and then keep spending because assets keep going up. And they're also getting 4.5% on their cash. So I think the biggest reason we haven't seen inflation come back down to target is literally stock prices, also fiscal deficits as well. But we're seeing both of those revert now. So yeah, I think he wanted to see this. It reminds me a lot of 2018, where, you know, NASDAQ equities went down 20% and then Powell pivoted. And I think he didn't want to do that pivot on Friday because he has optionality until May. But I think he just needs to hold that line and make sure that inflation stays durably low here. Because if he starts talking dove now, a month and a bit before the meeting, that's not really going to do anything useful for him. But if he can make sure that inflation gets durably bottomed out, he can then come in with confidence, I think, in May onwards. So I think he's just playing a fake game in the meantime, just to make sure that this is the one that actually kills inflation. So I think that's a non-consensus view versus a lot of people who think tariffs is going to create this huge amount of inflation. But I don't see it.
That's a really helpful take. I hadn't thought of it that way, like that he's kind of playing Fed theater, but it makes a lot of sense. And I agree with you. I think that even though sticker prices will go up on certain foreign goods as a result of these tariffs, I don't think we're going to see broad-based inflation as a result of it. If anything, I think the economic cooling effect will result in the opposite.
Yeah. I mean, like, you could walk us through different oil shocks, but if you see $70 rise overnight, like, yes, that'll hurt some inflation initially, but really it's a growth thing that comes afterwards, right?
Yeah. I think that we are in for a lot of volatility. So to borrow one of Bobby's ideas, cash is worth a lot more right now than it was 3 weeks ago. Sort of play the highs and the lows. I do think I don't believe Larry Fink when he says that markets could drop another 20%. I think that if SPY is down 20% from here, it's like Trump is a lame duck for the next 3.5 years. And that's not, I think he realizes that. He's got that intuition, and that's not what he wants. Now, I didn't expect things to get this far, but we're kind of flirting with the lows that I was predicting a few weeks back as like a worst case scenario. Like I thought this was a 5% probability but possible. And I thought that anything below here was just sort of out of the question. I kind of maintain that belief. I just don't think there's enough political capital in the world for a president to tweet the stock market down more than 30%. Come on.
Yeah.
Yeah.
And I mean, like, getting back to the trader mindset part is, we can do all this big brain talk of, 40 chess, game theory, geopolitical stuff, but it's also like, if you get a VIX at 50 and equities down 20%, you sort of just have to buy a bit. Those are just times when you just buy a bit. And yes, it can turn into a bear market rally. I'm pretty closely watching whether that's the case to get out of those. But yeah, I do feel like you just need to get in the front of this thing and, eat those shit sandwiches for a bit.
Agreed wholeheartedly.
Alternative. There is no alternative.
I mean,
you like
how many,
where's the cash going to go? Like, it has to go somewhere. Cash keeps getting generated, and like, people aren't going to put it into foreign equities. They're down 20% too. Like, it's
the other thing that people talk about all the time. It's like Trump's not doing this for the rich, for Wall Street. He's doing this for Main Street. But I think 60% of Americans own equities. It's a clear majority own equities, and if equities are off too far for too long, consumption. I mean, the recession is going to be horrific because all of the like what you were saying, all of the consumption comes from the top 20%. So I do think that there is a point where even Trump feels pain.
Yeah.
But I agree. VIX at 50, equities down 20. Like take a stab. Don't be a pussy. Just like buy a little bit.
Just get in front of it, man. This is what we live for. Like, this is what we do.
Just stop. Like, don't get bear hold. That's all I'll say. Just whatever you do not get bear hold. At some point, everything is going to start going back up again. Like, don't worry. This is not about betting on global collapse. This is about figuring out when this particular show is going to end.
Yeah. All right, guys. Well, that was a lot of fun. It's good to catch up again.
Yeah, this was great. Thanks for having us on.
Yeah, likewise. Always good to do these collabs and chop it up. Thanks everybody for watching too. That was awesome. Thanks for dropping by.
Adios.